Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Jeff S., Jack T., Jared W., and Luke A. On the program today is a returning guest we're pleased to have back. Mr. Jordan Trimble is back on the program. Jordan is the president and CEO of Skyharbour Resources. The company is focused on project advancement in Canada's Athabasca Basin, with its core projects at Moore Lake and Russell Lake, including work with major partners Rio Tinto, Orano, and Denison. Skyharbour also holds an extensive collection of exploration projects that are being advanced by junior partner companies throughout various areas of the basin. Skyharbour Resources is listed on the Toronto Venture Exchange under the symbol SYH and also on the US OTC markets under the symbol SYHBF. Jordan, thanks for coming back on the podcast.
Thanks for having me. Looking forward to catching up and lots to cover off today.
Yeah, Jordan, good to talk again and great to have you back for an update. It's been at least a handful of months here, if not a full quarter, if not more. So wanted to kick it off here. Of course, we'll get to Skyharbour. There's a few things there that have happened and some good results and news that have come out over the last few months. But I'd like to have you just kick it off here with your brief take on how you see current market conditions and, of course, some of those key items you're seeing out there as we wrap up now the third quarter and enter the final stretch to end the year.
Yeah, well, look, I mean, no question. It's been a challenging market this summer. We've discussed at length offline, the seasonality, and I do like to emphasize that we've seen this play out now like clockwork pretty much every summer since the bull market started in late 2020, and I think it's vital for people to investors to kind of take a step back and go back to the core fundamentals, the thesis for this commodity, for this investment. It's still very much, I think, one of the more compelling, fundamentally strong commodities and investment opportunities out there. Uranium, it's a volatile market. There's no questioning that, and we've seen this. A number of times over the last handful of years where the weak hands get flushed out. There's market volatility. In the case right now, we're obviously seeing some spillover from broader market sell-off, which I'm not that surprised to see a bit of a pullback, especially in some of the kind of high-flying sectors in the U.S. But we have certainly seen that spill over a little bit into the uranium equities. And I think it's overdone at this point. It's always difficult to call tops and bottoms, but I think, we're definitely in that oversold territory. One of the good charts or few charts that I've been looking at here recently is the seasonality charts for some of the larger uranium mining and development companies. So Cameco, UEC, Denison, Laramide, and a few others, and it showing the percentage returns each month. And if you look at basically on most of these companies over the last 20 years, they have a bottom usually put in early to mid August, right where we are currently. And from mid-August through till January 1st, most of these companies average 10, 15, 20% returns during that latter part of the year. So clearly there is a seasonality that is prominent in this sector. And we can talk a bit more about why that is. But, I think that's one key point here, at least in the short term. Now, looking out longer term, again, getting back to the underlying fundamentals, nothing has changed negatively for this sector. I think the news out of Kazatomprom last week, where you had an additional 3.5 million pounds of production for 2024. At least that was their guidance. That's assuming that they have a spectacular end of the year here this year. That I think spooked the market a little bit, especially coming off the back of Cameco's news, which was received quite positively by the market the day before, in which they announced, in particular, at their Inkai joint venture with Kazatomprom, lower production numbers relative to 2023. So I think it was a bit of a head fake that spooked the market. But just to put the Kazatomprom news in perspective, last week, we're talking about a 3 million pound increase, and keeping in mind too, this is from a major guidance decrease a year ago, right? Where they've obviously highlighted the sulfuric acid issues that they've had, as well as some development delays at some of their larger development projects. So 3 million pounds, assuming they do hit that number and produce that much additionally this year, when you're dealing with a 40 plus million pound structural primary mine supply deficit, that's a relatively small number, right? And what'll be significant is on August the 23rd, Kazatomprom will announce their guidance for 2025. Again, their original guidance was for over 30,000 tons of uranium produced in 2025. Needless to say, I believe they're not going to be able to hit that number, as I think is the case for most experts and pundits out there. We'll see what their official guidance is. But the market, interestingly, over the last week, sold off enough where I think it's safe to say that the market's expecting that this lower guidance isn't going to be much lower than that. So we'll see how things play out over the next few months. But there's seasonality at play. There's obviously sentiment, short-term sentiment is not great right now. But again, we've seen time and time out over the last several years that change going into the fall. And it's important to note we've got a couple of conferences coming up, the WNA at the beginning of September in London, which we'll be at. This is typically a marquee conference in the nuclear industry where you see a lot of contracting negotiations take place. And at the conference or shortly thereafter, new contracts being signed. And, we talked about this, Andrew, but having the lack of contracting, long-term contracting this year, the volumes have been relatively subdued. And, for a number of reasons, including the Russian import ban, the waiver process from that, and, a lot of utilities just pulling on every lever possible to basically shore up as much supply that they can get their hands on in their existing contracts. So whether that be flexing up on existing contracts or bringing in pounds of uranium forward in some of those existing contracts, in particular some of the contracts Western utilities have with the Russians. This has basically given them a bit of a buffer, right? But they can only do that for so long. I think Cameco in their quarterly call stated it, very succinctly, basically saying you can defer and delay these contracts, these new contracts, but you can't avoid them, right? And so I do think between now and year end, especially in and around the WNA, and as we work our way through the remainder of 2024, I think there will be a flurry of new contracts announced and signed, and that'll really, I think, spark the market. We could see some of that new contracting spill over into the spot market, right? As utilities are negotiating new long-term contracts. If, for example, they're not able to get the terms that they'd like, but they need the material, we could see them step into the spot market. That, I think, will provide a major catalyst at the end of the year, as we have seen in previous years. And it's important to note too, just from a historical standpoint, that we have not entered into a in excess replacement rate contracting cycle yet. So we last year there was just over 160 million pounds of material in long-term contracts. We are nowhere near that this year thus far, right? But if you look at historically when the uranium market has been the strongest, when we've had the best bull market years, it's always been around years where you've had replacement rate or higher than replacement rate contracting volumes. So well over, call it 180 million pounds of contracted material. You look at 2005, 2010, both of those years, you had 250 million pounds contracted in a much smaller market as well, in particular in 2005, right? So I think once you see the new replacement rate contracting cycle kick in, as I think we will in the next few years, that's going to turbocharge this sector. So, a turbulent few months, but a lot to be optimistic about. Again, you've got 200 million pounds, 195, 200 million pounds of demand, and the demand side. I think we spoke about this in our last interview. The demand side is very much an exciting part of this story now, and it's, as we've discussed, it's typically been a supply side driven commodity over the last number of years, with the supply side shrinking and in particular being quite constrained now, with only about 150 to 160 million pounds of primary mine supply, and the market bifurcation that we're seeing east versus west, where you've got a majority of primary mine supply coming from Kazakhstan, Russia, Uzbekistan, Niger, places that likely will not continue supplying an ample number of pounds to Western utilities. So the Western producers and suppliers are going to have to step up to the plate. But you've got this big primary mine supply deficit of over 40 million pounds. You've got demand growing significantly. You have the advent of AI and other new industries that consume a lot of electricity and energy, and you need that stable, baseload, emissions-free, reliable source of electricity generation, which nuclear provides. And a lot of obviously talk and commentary recently around these AI data centers being powered by nuclear energy, and going forward potentially being powered by small modular reactors. I think the SMR market, it's an emerging market, but it's one that could be a massive new source of demand for uranium going forward. Not so dissimilar to what the electric vehicle was did to lithium and battery metal demand. I think you could see that the small modular reactor market be a similar catalyst for demand growth for uranium demand and nuclear fuel demand going forward. So a lot to look forward to. It's obviously difficult getting through the choppiness in this market, but this is again, this time of year has provided for a great entry point historically. I've been purchasing more shares of Skyharbour. You can see with my insider reports, and I just see there being an incredible value proposition currently going into the next few months, given what's happening with the uranium market. And, I believe we're going to see much higher prices going forward, but also Skyharbour in particular is going to have its busiest 6 to 12 months. It's a very catalyst rich story. And we've got a lot happening in the near term to provide that value creation and catalyst for shareholders.
Lots of good, valid points here, and I think it's going to take some time to resolve a few things, but the outcome is, well, nothing here is 100% certain. The outcome is looking quite well, and it just requires some patience. There's obviously the struggles we've seen, whether we're talking mid-tiers or major uranium producers out there, the struggles that are being seen and yet to come in. There's a lot of silence out there on a few different fronts on some various new production coming online that seems to be struggling. So you have that piece of it. Then you also have this other wrench in the spokes a bit here with respect to, U.S. markets, some of the broad market fears out there that are happening and spreading, of course, globally. And then you also have this potential for change up in Washington coming out of an election here in a couple months that obviously changes out staff and all these things that happen at these agency levels. And of course, when that happens, there's obviously the job protection that starts in here and is already in place, but then also the potential for people to leave their chair and have it warmed by somebody else. And of course, that can also delay some of these things, whether we're talking about uncertainty surrounding waivers, and of course, that being a big part of the action this year are basically inactivity. Really appreciate all those comments, and we should see some of this stuff to start to resolve as we get into the end of the year here. I wanted to jump to a recent set of news events here. The first one I'd like to have you address here was that the company did recently do a transaction with Skyharbour Resources. Talk about that transaction.
Yeah, so it was a small transaction. We had a couple of claims that were a part of our Karen project that we had staked several years ago. The two of the claims that were, somewhat non-core for us had work commitments or requirements coming up, and we weren't planning on spending any money there. The two claims are adjacent to a property that COSA has, and so we figured instead of letting them potentially lapse and maybe trying to restake them, we would get some value for them, which we did, and we're happy to hold COSA shares. But it's a relatively non-core. It was a non-core holding of ours, and we do maintain the bulk of the project in a handful of other claims that we are still actively seeking option partners or JV partners on. So it's a part of our prospect generator business in which we monetize secondary and tertiary projects. We look to bring in partner companies that can pay us some cash or issue shares, as well as in most cases advance the projects, right? Spend the money advancing the projects. And we've got our 7 other partner companies, 3 of which are joint ventures, and 4 are still actively earning in. If all 7 of those partner companies complete their respective earnings, that would represent over 80 million Canadian dollars in combined project consideration coming in. So about just under half of that in exploration funding coming in from the partner companies, and the other half in cash and shares coming in from those companies, again, assuming that they complete their earnings. And we've also been negotiating on a few other option agreements and new property partnerships, which I'm expecting will have some news flow on sooner than later. So we'll continue building out that prospect generator business, as well as focusing our exploration efforts and budgets at our core projects of Russell and Moore.
So we have a little bit of a flavor here on some of the activities that you guys are doing with obviously the large group of exploration grounds you have in the Athabasca Basin, of course. But with that, while we're on the topic of these transactions and potential future transactions, of course, shape us a little bit of the general proposition for some of the other junior companies, folks that might be listening in on this podcast or folks that have yet to approach you. Obviously, there's a number of them out there that probably haven't yet. But for juniors looking to enter the basin and work with a company like Skyharbour, talk just about the general proposition that you would offer them without any, details, of course, that you can't share, but just talk about that proposition to work with Skyharbour and what they might look to get from a relationship.
I'll start with the inventory of properties that we have in the Athabasca Basin. So, as you pointed out earlier in the introduction, we have one of the largest mineral tenure holdings in the region, actually the 3rd largest, with 1.4 million acres scattered across 29 different properties all throughout the Athabasca Basin. So we've got exposure to the north, to the northeastern part of the basin. That most of the kind of more material core projects that we're actively advancing, including our 2 co-flagship Russell and Moore Lake projects, are in the southeastern quadrant in and around the McArthur River Mine and the Key Lake Mill. But then we have properties all along the southern margin of the Athabasca Basin as well, all the way over to the western side where you've got Fission and NextGen and F3 and others that are advancing deposits and developing projects over on the western side. So, you'd be hard pressed to find many other companies that have that kind of exposure all throughout the Athabasca Basin. Now, as your audience is probably familiar with, we have this hybrid model where we're actively advancing our two core projects, Russell and Moore Lake. They're advanced stage exploration assets that are host to either high-grade multi-percent U3O8 in previous drilling and or small uranium resources, right? They're not earlier stage exploration projects. We know there's high grade mineralization there. We're looking to make new discoveries to add to that or expand those existing zones. And it's relatively, given the location of the projects, very inexpensive to operate and drill there. We benefit from now having a camp at our Russell Lake project, which gives us a bit of this kind of hub and spoke strategy and benefit with the exploration on those projects and some of our partner projects nearby. So those are that's the focus for us with our drilling, and we'll talk more about that later. But getting back to the prospect generator business and the various partners that you're alluding to. So, we've announced 7 option agreements, as I mentioned. 3 of them have completed right through to joint ventures. So they've spent the necessary money in the field. They've paid us cash and shares to complete their respective earnings. Typically, we'll structure it where it's a 3 to 5 year option earn in, so that the optionee, the company coming in, has the option to earn in usually up to a majority interest in the project, anywhere from call it 51 to 70 or 80%. In some cases, we will offer a buyout option where they can purchase their remaining minority interest from us for a balloon payment in cash and stock. That's usually quite significant. So we try to retain our upside in the project, either through a minority interest in the project at the end of the day once they've completed the earn-in and it's a joint venture, or through a very, very large equity position in the company. We typically do have on some of the projects an NSR or royalty as well. So investors in Skyharbour get exposure not just to what we're doing directly on our main projects, but you also get exposure to these partner companies through our minority interest in the project that they're advancing, as well as if it's a public company, our equity position in the company, and again, in some cases, a royalty that will retain on the project. Now, new companies coming into the basin or existing uranium companies with projects in the basin looking for new projects, we're one of a few companies that does have such a large land package. We own these projects 100%. We have an inventory still of about 20 or so properties, again, scattered all throughout the Athabasca Basin. And in addition to offering or selling the property, the claims, we also can offer geological consulting and advisory help. We typically, our geological team, which has many decades of experience in the Athabasca Basin and in exploration in the region, will typically work closely with the geological team of the partner company and with the geotech group that's preparing and executing the programs. Will help with the permitting process. I think that's a big thing to highlight now, especially given the changes in the permitting process, exploration permitting process over the last handful of years. So we'll help guide the partner companies through that. We do as much as we can, within our capacity to do so, to help facilitate, successful exploration programs and to, provide these partner companies with as much of a one-stop shop for them to work with us on advancing and developing and value adding these properties. So it's not just the project. We do a lot of work kind of behind the scenes as well to help these companies be successful, because the more success that they have at the project, obviously that means more success for Skyharbour as well.
Jordan, thank you for that. I think it is very useful, especially for those looking to get access and have all of those extra things that you guys can bring along through a partnership can be very useful. So I appreciate the comments there, and always encourage folks that are looking at the basin to get in touch with Jordan and Skyharbour and have those conversations. It makes sense to have lots of conversations and see where they lead. So appreciate the comments there. On the other news things here, I wanted to have you talk about some of the recent drill results coming out of Moore Lake and also work out of Russell Lake. Good results coming out of here so far. Talk about those results.
Yeah, so look, the big news, well, a couple of significant news releases in the last few months, within the last month here. So at the beginning of July, we had two news releases come out. The first of which was an announcement of a new discovery at our Russell Lake project, where we intersected. It's the best zone of mineralization ever discovered at the project, 3% over half a meter. That was within 2.5 meters of 0.72%. So, us nor previous operators had intersected this kind of mineralization. It's relatively shallow at about 340 meters, and it's sandstone hosted just above the unconformity. And most importantly, and it's very exciting for us, is it's in a brand new target area. So just to take a step back and refresh people's memories on Russell, this is a new project in our portfolio that we optioned from Rio Tinto back in 2022. We carried out our first drill program at the project in 2023, just under 10,000 meters of drilling over several phases throughout the year. Most of that drilling, though, was carried out at what's called the Grayling target area, which is a multi-kilometer long conductive trend, mineralized trend, where there's widespread mineralization throughout that conductive corridor. It's the continuation of conductive fertile corridor from Denison's adjacent Wheeler River project. As you pointed out earlier, Denison is a strategic partner of ours. They're our largest corporate shareholder. Their president and CEO, Dave Cates, is a director of Skyharbour. So we work as closely with them as we can. And given the proximity, the adjacency of Russell to Wheeler, and the fact that a lot of the conductive corridors and trends from Wheeler trend onto Russell, it's a very strategic asset for us, given our relationship with Denison, and it's certainly helped us with the initial programs, planning the programs, prioritizing targets. So the Grayling target area, which was the focus for the drilling last year, we went in and we intersected some of the best zones of mineralization that had ever been discovered at Grayling, but still did not, hit that kind of multi-percent higher grade zone of mineralization. So this year we took a little bit of a different approach, and we started looking at a couple of potential targets associated with that kind of larger conductive trend, but are just off of it regionally and were not tested much historically. And we were able to, through a lot of hard work from our geological team in Saskatoon, refine a target that is near the Grayling target area, but appears to be, and related to it, but appears to be the kind of western extent of it, where you've got this conductive corridor basically splaying off into two different directions. The western part of that was never thoroughly tested whatsoever, and a big reason for that was that it basically runs right under the power lines. There's the haulage road that services the McArthur River mine to the north, the Key Lake Mill just to the southwest of the project. So we've got the benefit of having the haulage road there, which runs right up through the project, as well as the power lines, and our exploration camp is just on the other side of the road. So this fork target area lying underneath the power lines made it quite challenging to get definitive drill picks from the EM, the historical geophysics and EM data. And so we went through, we did a lot of work, geological modeling, and we basically came up with several new targets, knowing that there are, the structures are there, the conductors are there. And the first drill hole that we drilled into one of the conductors at this new fork target, we intersected this multi-percent zone in the sandstone. It was a breakthrough as far as the discovery process is concerned at the project. And we're going to be following that up here with additional drilling this summer and fall. In fact, we've got another 7,000 to 8,000 meters combined across both Russell and Moore, so about 4,000 to 5,000 meters of that, which will be focused at Russell, and the bulk of that 4 to 5,000 meters will be at this Fork target area. So it's a new discovery. It's open in most directions. Very little drilling there historically. We think we've just scratched the surface of something much larger. It's relatively shallow. It's sandstone hosted, which is very interesting. If we can prove up a deposit, obviously there's the potential for ISR at a sandstone hosted target like this. But we're still, again, in the early days of the discovery. But what's exciting about that, and again, getting back to where we are in the market, what we've seen, transpire over the last, handful of months, going into a program like this, where we've now shown there's high grade mineralization that's present at a new target, but very little historical drilling or work, and the great potential for additional high-grade mineralization to be discovered and to grow that zone. Very rarely do you get an opportunity or see an opportunity like this where, that next drill hole could deliver something that really gets the market's attention, right? And we think we're going to be able to do that. One of the key features with this upcoming drill program too is we have a much better handle on the cross-cutting north-south trending structures. So what we're looking to do here is test specific zones on the conductor where you've got these big regional cross-cutting structures or features that break up the conductor and allow for more deposition of higher grade uranium. And so that's going to be what we're testing in this upcoming program. Given that, we basically just scratched the surface with the initial drilling in the winter previously this year, we weren't able to thoroughly test it, obviously. So this upcoming drill program will be pivotal for us and for the new discovery. So keep an eye out for news flow. That drilling will commence here in September. We're fully funded and permitted for that. And the great thing, again, given the infrastructure at the project and these targets are land-based, they're easy to get to, we can basically drill it all year round at a very low cost of about less than $350 Canadian all in a meter, which is significantly lower than most other exploration companies drilling at more remote projects. So that's the Russell Lake update. Again, major breakthrough and the early days of a new discovery at this new target, the Fork target. We finished a 5,000 meter program, having announced those results. As I just discussed, and we have another 4,000 to 5,000 meters fully funded, which will start up in September. Now, moving over to the other notable news release that we had actually in that same week, we carried out a few thousand meters of drilling at the adjacent Moore Lake project. And again, this project is a co-flagship advanced stage exploration asset, host to high-grade uranium at what's called the Maverick Corridor. It's a 4.7 kilometer long conductive corridor, host to several high-grade zones of uranium mineralization, including the main Maverick zone and a zone that we discovered in 2017 called the East Maverick zone. Drill results there, we drilled a hole back in 2017 where we had 21% U3O8 over 1.5 meters. That was within 6% over 6 meters at the main Maverick zone. And more recently, as in a couple years ago, we started drilling a little bit deeper into the underlying basement rocks because most of the historical drilling at Moore Lake was relatively shallow, did not go much deeper than the unconformity at about 270 to 280 meters. And we started drilling a little bit deeper into the basement rocks, and in 2021 intersected the best zone of high-grade uranium mineralization in the basement rocks, which included 6.8% over 2 meters. Now, we did not drill the project basically for a couple of years until just recently as the focus shifted over to Russell. But this year we were able to get back there and drill a few thousand meters, just under 3,000 meters at this main Maverick conductive corridor. And most of the drilling was focused at the main Maverick zone, in which every hole that we drilled there intersected significant uranium mineralization. A couple of holes in particular, the highlights included 4.6% U3O8 over 5 meters. Within that 3 meters is 7.3%, and upwards of a half a meter of 15%. And it's relatively shallow at about 265 to 270 meters. The bulk of the high-grade uranium mineralization is also sandstone hosted right at the unconformity, which again could make it interesting if you're looking at it through the lens of ISR or SABRE as a mining method. It's several high-grade lenses or pods that make up a global resource. We are working on a resource estimate that'll be out later this year. We are planning, however, to follow up on this recent drilling with another 2,000 to 3,000 meters of drilling to again just continue proving up as much high-grade uranium as we can at these lenses or pods of mineralization along that conductive corridor. So that program is actually going to be starting here very shortly towards the end of August. Again, another 2,000 to 3,000 meters. And that will be, again, expanding the known high-grade zones of uranium mineralization, adding to that. That'll, again, provide news flow right through, along with the drilling at Russell Lake. It'll provide ample news flow right through the remainder of the year into the new year, and we're fully funded and permitted for that.
Jordan, thank you for the update on that. And looks like there's going to be more results yet to come. Looking forward to seeing that and seeing how this develops. And then it looks like also that this data gathering and these results will obviously be evaluated throughout the winter here as you guys start into the next campaign of testing these structures and hopefully coming up with a larger discovery here as well. I want to get to capital structure in a moment, but just to finish up here, and I think we have a pretty good idea where the junior partner companies are, but I wanted to give you just a moment to talk about Orano starting the soil sampling program at East Preston. Can you just talk about that briefly and what you would expect to see come out of that before the end of the year?
Yeah, so this is a fairly large field program that Orano's carrying out this year, the first in 4 years at our Preston project, in which we have a minority interest in, and Orano's the operator with 51%. They just completed geophysics earlier in the year, and they're carrying out a fairly sizable SGH soil sampling program this summer, which we're keen to see the results from. It's a method of soil sampling that tests for trace amounts of hydrocarbons associated with uranium deposition. It's worked well for them over on the eastern side of the Athabasca Basin. So it's a great way to cover a lot of land relatively inexpensively. So we'll get the results from both the recent geophysics that they completed as well as from the soil sampling program in the coming months, and we'll see what they have in store for 2025. But they've been a great partner, JV partner to work with, and thrilled to have them carrying out this program, coming in at just under $1 million Canadian, which we've participated in as a minority interest holder in the project. And just on that same thread, we also have a news flow from our other JV partner, Azincourt. They completed a drill program earlier this year. Final assays are pending. They've been advancing that project aggressively over the last handful of years, and they've done some great work there. I think they're onto something there. And then within the 4 option partners, we had both Tisdale and North Shore actively advancing and drilling the South Falcon East and Falcon projects, North Shore at Falcon and Tisdale at South Falcon East. They both completed drill programs, winter programs earlier this year, both having intersected anomalous uranium mineralization and pretty good looking rock. The Tisdale program and partnership, again, this is at the South Falcon East project, is particularly exciting given that there's a deposit there, the Fraser Lake Zone B deposit. It's a lower grade but shallow near surface deposit. And so one of the things that they'll be doing going forward is looking to expand that deposit and looking to build on the previous resource number. And then adjacent to them with North Shore, again, just completed this winter program, which was the first drill program carried out in a number of years. And it's relatively shallow drilling. There's widespread mineralization across the Falcon project, and we're thrilled to have them. They've done a fantastic job going in there in a relatively short period of time and getting to work on that project. We are expecting both of these companies to be active and continue advancing and drilling these projects in the next 6 to 12 months. And we have a few other partner companies as well, Madero in particular, the Urchison project, planning some exploration for later this year. So you're going to have not just obviously the drill programs, the work that we're doing at our co-flagship Russell and Moore Lake projects, but you're going to have 4, possibly 5 or 6 of the partner companies in the next 6 to 12 months carrying out exploration and drill programs at the various other properties. And that's assuming that we don't sign any additional option or JV agreements with new partners, which, as I alluded to earlier, I think we will be announcing at least one here in the coming months.
Lots of stuff here to look at. And of course, the audience has a number of junior partners to look at on their own time as well. Tisdale certainly continues to look quite interesting here on a valuation perspective, and then also just on progress here and what that project can potentially offer here as that gets continued to be proved up, that deposit, which is already existing. So I appreciate the comments on that. Real quick, capital structure, just update us where we stand, cash now or maybe cash post program, and then also shares outstanding at this point.
Yeah, so there's about 182.5 million shares issued and outstanding. Again, obviously with the pullback, I think the valuation right now is very enticing. I've been purchasing shares at these prices and will continue to do so. We're well funded with over 5 million in the treasury, which covers this upcoming 7,000 to 8,000 meter program. That'll come in at about $2.5 million Canadian for Russell and Moore. So we'll have a little bit left over as well for drilling and work in the new year. Now, it's important to note too, though, that we do receive cash and share payments from these partner companies. Typically, we'll receive between $1 million to $2 million a year. Now that escalates as the partner companies complete their earnings, and in particular in the latter years of the earnings, where typically the cash and share payments are more. So it's been a big reason we haven't had to raise a hard dollar in a private placement financing in 4 years. The last private placement we did for just hard dollars was in August of 2020. Again, part of that is because we've been able to monetize some of the other secondary and tertiary projects in the portfolio, and we'll continue to do so.
Jordan, thank you again for that, and looking like a good position to be in here. Just one other thing, you're going to be available in the coming months at some various conferences, but obviously the main one here is WNA in London. Just talk about where you'll be, just in case some of the audience members happen to be in the same area and they want to hook up with you.
Yeah, absolutely. No, I'll be at the conference basically there right through the week. Some meetings earlier in the week, as well as the conference towards the end of the week. So I'll be at the Park Plaza where they host it. So happy to meet with anyone that's going to be there.
Jordan, well, let's leave it there for now. For potential investors who are listening in, the company has a market capitalization of about 60 million Canadian dollars here. Why should Skyharbour Resources be considered within the institutional, family office, and retail investors' portfolio at this stage where the company is, and of course, with current market conditions?
I think that the easiest way to sum up Skyharbour is it's a one-stop shop for investors to get exposure to high-grade uranium exploration and discovery potential in the Athabasca Basin across numerous projects. So you've got the 2 main projects that we're actively advancing. And, as I highlighted earlier, I've never been as excited about a project as I am currently about Russell Lake, given what we saw in this recent drill program and given the potential of this, of what this upcoming program can deliver. But you also get exposure to the various partner companies and partner funded projects. So you've got multiple irons in the fire with a handful of different projects throughout the Athabasca Basin that are being advanced by different operators. Equity dilution is kept in check with the prospect generator business. And then again, just a quick high level kind of comment on the market. There's the seasonality at play. I think we're going to be coming into a very strong period over the next 6 to 12 months. There's a lot of very significant potential catalysts on the horizon, which we discussed. Look, when you've got uncovered requirements of over 2 billion pounds between now and 2040, that kind of says it all. There's going to be a lot of material purchased, whether it be through long-term contracts or in the spot market. over the coming years. And the supply side response, we will not see the supply side, the new mines being built in a relatively short period of time. It's not easy to build mines. It's not easy to produce from mines, and so any supply disruptions that we see going forward, or development delays, will have a major impact on the market. And again, Skyharbour offers, as a junior company, a little additional torque or leverage to rising uranium prices. And so I think, again, coming into the next few years of this bull market, I think we're very well positioned to deliver on various value creation events and developments, whether that be through our exploration or partner funded programs, additional project acquisitions, or building out the prospect generator business through bringing in new partner companies. And last but not least, there aren't that many companies, pure play Athabasca Basin, advanced stage exploration companies, so call it 50 million market cap to 500 million market cap companies that are focused in the Athabasca Basin. It's just us and 3 other companies. So it's not a crowded subsector. And I think, again, as the market improves, as we see this bull market play out, that will benefit us and our shareholders.
And Jordan, remind the audience how they can best contact the company.
The easiest way is to contact us via email or give us a call. All of our information is on the website. So you just go to www.skyharbourltd.com. That's with the spelling with OUR, ltd.com. You can get all of our information on there. You can reach out to me or our investor relations manager, Nick Cultura.
Jordan, great update. Really appreciate it. Thank you again for taking the time. Looking forward to further news and having an update with you towards the end of the year.
Thank you.